again later in the afternoon. With that, let's move on to two stocks that are seeing a fair amount of green on the screen. I'm talking about HAL, Hindustan Aeronautics, as well as Bharat Forge, both up between 2 to 3%. And this is on the back of the Defence Ministry approving a rather large tranche of orders. We're talking a total of 70,000 crores. Vivek is here. Vivek, it sounds like a huge number. So tell us a little more about the details and whether these companies really benefit.
Well, absolutely. Yeah. The headline number, of course, is very large, 70,000 crore spread across, three main order wins. So when you're talking about the three segments, it's helicopters, it's ATAGs, that's the advanced artillery gun systems, and the BrahMos missile. So now, this 70,000 crore, it has to be divided into the number of years as well as the number of orders as well as the operation and maintenance contract. So first, let's have a look at, how HAL benefits from this particular development. Indian Navy is going to buy 60 utility helicopters, marine chopper from the company. The total order size is 32,000 crore, which is divided into the actual delivery of the order as well as the services and spare supply that the company will enter into. Along with that, the Indian Coast Guard is also going to get advanced light helicopters from the company. Now, this particular order win is worth around 1,500 to 3,000 crore as per analysts. Now, coming to Bharat Forge in a JV with Tata Advanced Systems will be getting an order for the ATAG howitzer. Now, this particular order win is worth 8,000 crore. So these order wins will get awarded over the next couple of years. Yesterday, the proposal has been clear. The actual orders are yet to come in.
Okay, thank you very much for that. Let's talk a bit about Cyient, right? That's a stock that Nimesh earlier told us how Morgan Stanley has given it a double upgrade. So quickly to tell you the reasons why. For one, Cyient gets a lot of revenues from the aerospace industries. Nearly 18% of their consolidated revenues comes in from aerospace. If you add communications and railways, it's about 44% of their revenues. And this is a space which went through a cyclical downturn, but now given the volumes, the pickup in volumes that we've seen for in the aerospace sector, this vertical for Cyient is likely to do well. It's already started to do well. The company is focusing a lot on improving margins. So that's the second lever. And third, they're looking at value unlocking. Now, the company has already filed a DRHP with SEBI to separately list their products business called DLM. Once that happens, it will perhaps help shareholders make some more money. And finally, the fourth reason is the valuations of Cyient at 12.5 times FY25 PE. They're in line with their historical averages, but they're cheaper than what peers are reporting, and that is the comparison plate, right? Cyient is trading at attractive valuations according to Morgan Stanley. So those are four reasons why Morgan Stanley today has double upgraded Cyient. Here's what we'll do. We'll slip into a very short break. We'll come back and discuss the way forward with Jigar Mistry of Boyne Capital.